Hello, everyone, and welcome to this week's watch list preview. Um, there were a lot of inside weeks this week, so I narrowed it down. There were some, for example, Netflix. Ignore this name on this. I just took last week's and erased it. I have to rename it still. Um, Netflix, for example, inside week, but it's been nothing but chop now for I don't know a month or two. Chart looks horrible, so I didn't include that one. Another one was I think maybe I forget which one it was, but there was another one that the chart didn't look bad, but it has earnings on the 18th, which is Tuesday or Wednesday. Wednesday, I believe. Has earnings on Wednesday, so I left that one off. Not saying you can't trade it. I just don't care to. I mean, if you try to trade something right now that has earnings, you're going to be fighting IV, the implied volatility. The IV is going to be jacked on it, and you're going to be fighting that. So uh, let's say it's going to the upside, and you jump in, and the IV is way up there. You get any kind of pullback at all, that IV is going to start coming down, and it's going to magnify the speed at which your options premium goes down. So for that reason, I'm not totally against, Apple's a good example. Buy Apple maybe a month before earnings, and usually it runs up. If you buy it a month out, the premiums usually aren't that bad. The IV is still not bad. But to buy something 2 days before earnings, that's just not me. So, not saying you can't trade it, can't scalp it, whatever you want to do with it, but it's just not something I'm looking for. So, anyway, I narrowed it down to six or seven. One, two, three, four, five, seven of them. Narrowed it down to seven that don't look too bad. For you folks that like to trade down days, trade pullbacks, I have a few on here for you. So let's take a look. Get this. All right. Let's get this out of the way here. We'll start with AMD. If you look at AMD, it's doing pretty good on the year. It's pulled back recently, but it's doing pretty good. The quarter, kind of the same. The month, it's pulled back quite a bit. It hit near the top of the broadening formation, um, and you kind of, if you look at this, I drew it off of the weekly chart. It was the top of the broadening formation, so I can't really say that it pulled back off the top of the broadening formation, but you see where the broadening formation is going. So we had an inside week here, kind of a hammerish candle. I know from a technical standpoint it's not a hammer candle, but the same principles apply. The buyers came in. If you look at the candle the psychology of the market, it opened right here, and the bears came in and pushed the price down. They didn't have enough strength to break below the previous candle. The bulls came in when it got close to there. The bulls came charging in and pushed it right back up. So if you think about this on a lower time frame, the bulls were in charge in the more recent time frames. Um, maybe not if you look down at the 60-minute, maybe not because um, it did close below the open, so we don't know what happened unless we look at the lower time frames. It may have popped back up and then pulled back down. Either way, it's a bullish candle. Um, so I'm going to look more to the upside, and I know we're going to be watching for exhaustion risk. We are near all-time highs or at all-time highs on a lot of these things, and you have to be mindful that we may get to a point this week where maybe a company comes out with bad earnings, and that's the catalyst it needs for the market to sell off, which is healthy. There's nothing wrong with that. Just make sure you mind your stops. So I'm looking for a break above this candle, this inside week of 112.33. We come down to the daily chart. We'll look at some targets here. That's the high of the previous week here. Uh, The first target will be 116.26. That's a nice $4 move. Second target will be 117.68. Third target's going to be up here at 122.49. Move your stops up as you go. Once you break this first one, let's just say, example, you may want to go with one contract. A lot of people go in and they'll buy 5, 10 contracts right off the start. What happens if you buy, you spend $1,000 buying 5 contracts, and now, you got your trigger here. Now it pulls back and you stop out. You stopped out on 5 contracts on $1,000 worth. Let's say it's maybe a 15%. And I don't necessarily agree with percentage stops, but let's just say it's 15%. And your stop, wherever your stop is, maybe your stop is going to be below the top of this candle here. I don't know, but let's just say it happens to be 15%. You just lost $150. If you only bought one contract, you're only down $30. So you buy one contract. Once it breaks this target, it may come up here, come up a little bit, pull back a little bit, maybe dip just below this, and then come back up. Once it pops back up above it, that'd be a good time to add. Maybe buy one more, maybe buy 3 more. Same thing with here. Once you hit target 2, it comes up. It may come up and it might just shoot straight up. It may come up, and I don't know if I can draw. I've never really done any drawing on here, and if I do, it's probably gonna be pretty ugly looking. I'm sure there's a drawing tool, but anyway, it may come up and do the same thing. Come up, come back down a little bit, test this support level, take off again. That would be a good time to add again. And while you're doing this, your average is going to move up. Let's say you bought here. Let's say it was $2 a contract, $200. $2 a contract here. You bought in here, it may be $4 a contract. Now your average is going to be way up in here somewhere. So you have to remember, you don't want to keep your stop back here, because if you have 2 contracts, your break even is right here now. So if you let it go all the way back to here, that's going to hurt. So you want to keep your stops a little bit tighter once you start adding. Once you break above here, maybe move your stop up to break even, which will be about here. Move your stops there. Once you break above this, move your stop to about break even. If you break above this one, at that point I'd move my stop to this first target. Once you break above this one, you're going to add again. Now your average is going to be real close to this target 1. I'd put my stop at target 1. Once you get up to maybe halfway between target 2 and target 3, move your stop to target 2. And then just start slowly moving it up. You can even go down to the 60. If you go down to the 60 here, look at these targets. You have a gap here. You could set this as your stop because it's the bottom, the top of the gap. It would be the gap fill. Once you break above it, maybe set your stop here below the bottom of this candle. Same thing, just use these candles as stops, because there's going to be some support and resistance. This one here, it's a pivot high. You have a pivot high, that's going to provide some support and resistance. Move your stop to maybe here. Once you break above this and you're up here, maybe move your stop to here. If you get stopped out, so what? Now you have 3 contracts, maybe even more, depending on how many you bought at a time. And your break even is way down here. That's a pretty nice profit. So I'm not telling you that's how you have to trade it, but just giving you an idea of some good ways to trade that. So let's take a look at the next one, Las Vegas Sands. This one, if you take a look here, inside year, but it's coming down. It's getting close to breaking the low of last year. It is stuck inside these mother bars here, and I call them these mother bars because of the compound 3 here. So you're stuck, or compound outside bar. You're stuck in here, and for all intents and purposes, you're really stuck inside this candle here. But you're stuck inside, so I'd be very careful with this one. You see it's for years now. It's been a lot of chop. That doesn't mean you can't trade it. You look at your range this year, $40 up to almost 70. So there's nice range there, but there's still a lot of chop. There's no real decision on which way you want to go. Take a look at the quarterly. You know, we're still stuck inside this mother bar here, but the quarter was ugly. Take a look at the monthly. Same thing. We're stuck inside this compound mother bar here. Stuck inside, but we are, you know, still pulling down. Still good to the downside. You can make some money on that. So here's what I'm looking at. A break below this inside candle, which is 39.50. Target 1 is going to be 39.07. I know it's not much of a target. It's really not even worth trading. Your risk reward just isn't there. But there's such tight ranges here that once you break below this 38.74, this gives you somewhere to set your stops. You break below 38.74, now you're looking at targets back in here. You have this. I didn't mark them, but you have a target here at 36.77. You have another target down here at 33.25. In 1 week, will we get that far down? Not likely, but I just wanted to throw it out there. You know, if you trade this one, just keep some tight stops because it's been a lot of chop for quite a while. Nike. Been really good this year. Quarter. Really good on the quarter. Month. Good on the month. Week. Inside on the week. Not a lot of targets on this one, so you have to watch. If you are looking to enter right here, the high of this candle on the weekly chart, it's 173.96. All-time high is 174.38. So you're only looking at about a 40-cent target or 40-cent magnitude there. What you can do to be more aggressive, come down to the daily chart. You see we had a 3 candle on Friday. We popped above this 9 EMA also. So you could enter on a break above this candle. The high of this candle is 170.172. If you want to be more aggressive, you could jump in a break above this. That gives you closer to a $3 move to your target. So something you could look for on that. It'd be a more aggressive play, but it's another option since you don't have a big target or a big magnitude. If you go back to the weekly, maybe it was a monthly. Yeah, we have a broadening formation right here on the monthly. There's some magnitude up to the top of that, which is probably going to be closer to, you know, probably up around 177 or so. So you have some range there. If it decides to break this high, all-time high, and go to the top of the broadening formation. So that's another possibility on that one. Pepsi. And sorry, this is going to be a longer video. I try to keep them short, but there's kind of a lot going on this one. Pepsi, it's been a good year. Been a good quarter. Inside month, we are closer to breaking the upside. Inside week, closer to breaking the upside. So right here, we're looking for a break above 156.67, which is the high of last week's candle. We come down to the daily chart, find some targets here. Target 1 is this pivot high here of 157.15. Only about a 50-cent move from the trigger. But target 2 is this pivot high at 157.60. Target 3 is this high at 157.96. And then target 4, I believe this is all-time highs at 158.66. So keep an eye on Pepsi for that move. PayPal. This one here, we're looking at to the downside. You see it's up on the year. It's green. It's up, but it's been selling off recently. On the quarter, you know, we're kind of down almost to the middle of the range of the previous quarter. but this quarter hasn't been pretty. Take a look at the month. We're 2 down on the month, coming back down through all these candles. 2 down on the month, and we have an inside week. So looking for, there's a lot of weakness in PayPal right now. Looking for a break below 272.50, which was last week's low. If we break that, we go to the daily and we take a look at target 1 is going to be the low of this candle at 270.67. Target 2, the low of this candle at 269.57. And target 3 is going to be the low of this candle at 268.46. Target 4 is going to be this pivot low at 265.31. Target 5, this pivot at 261.69, pivot low. Will we get that far down? I don't know. You're looking at, I don't know, $11 drop from the trigger. But you never know. If the market turns on us this week, there's a good chance PayPal could pull back that far. But keep an eye on that one. Uber. On the year, not a pretty year. It's still 2 up, but it's not been pretty lately. On the quarter, it's an ugly quarter, 2 down. On the month, ugly 2 down on the month. It has came back recently though. On the week, you see we had a hammerish candle here. Earnings was on the 4th, so about a week and a half ago. After that, we pulled back, sold off down to about the midpoint of the previous week's candle. So we're looking for a break below $42. Target 1, if we come down to the daily, target 1 is the bottom of this candle at $40.15. Nice, decent move. Now this might be hard to see because I have to go back out pretty far. Target 2, you look here, we have a gap right here on the daily chart back on November 4th. Target 2 is going to be the beginning of that gap at $39. Target 3 is to fill the gap at $36.15. So that's what we're looking for on Uber. Next one is WYNN. We have a similar situation with WYNN. On the year, it's an inside year, so you be mindful of that. It's not, I don't know, the range is 143. It's had a big range, but it's still inside. On the quarter, it's 2 down on the quarter. It's coming back down on the month. 2 down on the month, but it has popped back up in the more recent times. On the week, here's our inside week. Let me zoom in a little bit. So we're looking for a break below the last week's candle of 93.59. Come to the daily. Target 1. Here's our trigger. Target 1 is the bottom of this candle at 92.01. Target 2 is at $90.26. Now if we zoom out again, there we go. We have a gap. Now technically the start of the gap technically is up here, but that's actually above where the trigger would be. So it's below where it's at right now, but it's above where the trigger. So once it triggers, it's going to be down below that gap anyway. So I'm calling this a target here, and I'm going to call it the start of the gap at 85.96, and target 4 is to fill the gap at $80.90. So you're looking at a $13 move on a $93 stock. That's 15% roughly. 15% move on a stock. The options on weekly options on that be a pretty nice trade. But again, be mindful of your stops. Whether you go short or long on these trades, just remember, don't try to predict what the market's going to do. You react to what the market does. So But again, here's my watch list. I'll get a picture of it and I'll put it up on my Twitter account. And thanks for watching. Hope you guys killed it last week. 3 out of the 4 really killed it. I think last week was Caterpillar, US Steel, which is X, Google. Those 3 all killed it. And the 4th one was UPS that it hit the trigger and fell right back. So that was the only failure. But the other 3 absolutely crushed it. I think they hit every target. So hopefully we get some more of that this week. So good luck and thanks for watching. And I'll see you guys later this week. Friday maybe I'll do a follow-up review or follow-up video. Thanks. Bye.